Hey everybody, it is Chuck Barone. Tuesday, September the 17th, 2024. Steamrolling through another week. Big day coming tomorrow, guys. Tomorrow is Powell Day. We will pivot from a tightening cycle to a rate cut cycle. The big question now that everybody's debating and fighting about is how big will the rate cut be? And now they're even moving past that to how soon can they get the Fed funds rate under 4%? Right now it sits at 5.35%. So they're looking at, a point and a quarter to a point and a half worth of rate cuts, point and a half if you want to get under 4%. And the market really speculating. I guess what they're doing is going by the history of when they change from a tightening cycle to a cut cycle to a loosening cycle. Typically, the first cut is 50 bips, and they cut as much as they need to. But 99 out of 100 examples, the country was heading into a recession and was already in one. Therefore, you have a need for a big rate cut like that. You have a need for half a point to get things started. We are not in a recession right now. I guess you could argue that we're heading toward one because there's a lot of conflicting data, but it really doesn't look like it. Unless, of course, you're in real estate, then you've been in a recession for a couple of years already. But anyway, I'm getting way ahead of myself here. Before I get rolling, let me just take a half a second. Welcome everybody to the show. As always, thank you guys for your support for the show, for being here. A special thanks to all the guys on the chat today, joking around about if you guys saw the news today, all the pagers of Hezbollah's pagers blowing up. I was cracking up. I'm like, pagers? I mean, who has a freaking pager anymore? How totally 80s, right? But apparently, I guess pagers are still a big deal in Lebanon. And the Brits set the pagers off, blew everybody up. I guess thousands of people were injured. They killed 9 people. And what a clever idea. I don't know how they actually got them to blow up. But so anyway, that was the joking around about the pagers on the chat here. I laugh. I mean, most of the people watching this show probably had a pager at some point. I know I did, right? Remember, beep, 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 oh, call so-and-so? Yeah, maybe, right? I mean, that was so long ago. That's got to be, going 40 years ago? I got my first cell phone in like 86 or 87 when they were friggin' charging you 25 cents a minute for them. So it's just amazing to me how really we take a lot for granted in the U.S., don't we, guys? Anyway, let's turn it back around and get to today. We know tomorrow's Powell Day. We know Fed rate cuts are coming. So the markets are a little skittish now. A little weird, like, okay, what's it going to be? Is it going to be a quarter? Is it going to be a half? Everybody placing their bets. So the markets were kind of mixed, not a lot happening. Let's go over it. The Dow Jones, minus 15 points, 41,606 was briefly in record territory during the day. Couldn't hold it. The NASDAQ up 35 points, 17,628 on the NASDAQ. The S&P up 1 point, 5,634. The S&P was also near record territory earlier in the day. I mean, really, do our stock markets typically set records as a recession sets in? They don't, guys. They don't. And there was an old Wall Street saying when I was back at Lehman. They used to say that the stock market climbs a wall of worry. In other words, if people aren't worried, people aren't concerned that the market could turn and crash any second, it's probably almost done. The rally is almost done. But when they're worried about it, when people are looking at the market as diligently as they're looking at this market, typically it's not going to suddenly turn right around, right? So the markets today were a little bit mixed because of the Fed tomorrow. I'm sure after tomorrow, depending on what Powell says and does, the market will set a new direction, and we'll be here to report on that. The bond market today, well, yields rising, so bonds selling off a little bit today. The 10-year up 2 basis points, 3.64% for the 10-year. The 2-year actually jumped 5 basis points, now at 3.61%. So that at least we're not inverted. So the 2-year rate is lower than the 10-year rate, but it narrowed back down a little bit again today. Now only 3 basis points separating the two. The US dollar today rallies up. Go figure, guys. The dollar rallies up 22 basis points, 100.98 on the index. So it's right there at 101. I'm a strong dollar, guys. You guys know I do not want to see the dollar get crushed. And I was glad to see a little bit of a bounce today, even though it was certainly not part of the trend, more an anomaly, right? Precious metals today, with the dollar strengthening, precious metals come down a little bit. Gold falls $12.60, $2,570.40, $2,570.40 for an ounce of gold. An incredible number, guys. They would have told us at the beginning of the year that gold would end at this number at the end of the year. We would have been thrilled. Look at him go, man. $2,570. Silver today down 5 cents. But actually, I was happy to see it because guess what? Even though it had a chance to sell off, it held $30. $30.75 for an ounce of silver. A very happy moment for me today because when I saw gold start to slide, when I saw the dollar rallying, I kind of thought, well, okay, there goes our support, right? But silver holding its own, hanging in there. Let's go silver, man. We need a little bit of a gain. Let's consolidate above $30 and no looking back, guys. Oil today rallies up again. Oil up $1.04 per barrel, now at $71.13 for a barrel of West Texas Intermediate. I think it's kind of cool because even though oil's rallied up for 3 straight days, it's still solidly right where we expect it to be, between 70 and 75. I think that's where oil's most comfortable selling right now, guys. They got big worries about demand on oil. Supply is robust. The U.S. is now the world's largest oil producer again. OPEC, no signs of cutting anywhere on the horizon. So oil production steady going up. Oil demand unsteady going down. And now with China looking like they're moving toward a recession, moving toward a deflationary situation, which they are not going to enjoy that, guys. It's always nice to see the prices of stuff going down. You know, the prices of groceries, the prices of clothing, the prices of stuff you buy, you know. But what people don't consider is what goes down the fastest are the assets you own. Stock market, bond market, real estate. So people in the United States are sitting on $28 trillion worth of home equity. That's why they're trying to figure out every possible way they can to let investors tap into that home equity so they can start spending that money in this economy, because now they're scrambling around. You know, there was an old joke about sooner or later you run out of other people's money. Well, here we are. So now everybody kind of scrambling around trying to find money where they can. Fascinating times, guys. Bitcoin today rallies up $2,273. Now it's $60,087 for Bitcoin. So go Bitcoin like silver. Broke through that resistance number. 60,000 has been tough for Bitcoin. It's broken through a couple times, but has not been able to sustain. So now it breaks through again. Even though it looked like it was moving toward a down, going to go for support numbers again. It got a nice little bounce today. Now we got to watch and see very closely both silver and Bitcoin sitting just above these numbers. Let's see if they can hold these supports. It's going to be big for the markets, guys. All right, so let's talk about news we need today. Retail sales. We got the report today. We were expecting it. Nothing really happening, guys. Retail sales were a big nothing burger, up 0.1% in August. So I guess they were happy because they were fears that consumer spending could actually decline. So to see it actually come up with a positive number made everybody happy. Now, don't forget, in July, we had the big jump, 1.1% month over month. So it was down in June, huge jump in July, and now just kind of a meh. Consumers are still spending. They're not declining in their spending, but the pace that they're spending more, the increase in spending is slowing down a little bit. Consumers are hanging in there, though, guys. It's really astonishing to me. I think that they just, if you're borrowing money to buy stuff, okay, which I hope none of my viewers here, none of you guys are doing. You're going to borrow money to buy a new shirt. You're going to borrow money to buy a new car. Why? Why just drive your car you have now till rates are down and you have a little bit more money so you don't have to finance as much? Guys, the stuff we teach is so elementary to having a successful financial life, a prosperous financial life. It's always astonishing to me when people just don't do it, right? Now, these knuckleheads continuing to borrow, and it's the vast majority. Us, the schmuckatellis here, we're the minority, guys. Most people are not doing what we're doing. Most people are not staying away from debt, paying debt down, saving 10% of their income. Nobody's saving 10%, guys. Hell, the entire USA savings rate is around 2%. Saving money, pay down debt, being a good consumer, spend money if you have to, just spend your money wisely. Don't do the impulse stuff. Look for the best deal. Get what you got to get a bargain on it. Invest your money conservatively. If you'd have done what we've said, you'd be sitting pretty right now. And typically the guys who are following us are sitting pretty. Nice to know, you don't have a giant slew of payments coming up at the end of the month, right, guys? Knowing that this stock market, we're at a stage right now where it could go zoom, 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 zoom. There's so much uncertainty. Won't affect your day. Maybe a little bit of, ass puckering, holy crap, look at that market decline. But it's not going to affect your day and your life. And that's where we want to be living, guys. So retail sales, up 2.1% so far this year. That's the pace we're on, 2.1%, which I guess, 2% seems to be the Fed's favorite number, right? It's like they want 2% growth, they want 2% GDP, they want 2%, 2%. They want 2% inflation, which we haven't hit yet. Now they were pointing at core CPI, excluding food and auto. They were pointing at core PCE, pointing at these numbers saying, look, they're below 2%. Okay, guys. 1.7% on both of those numbers. Yeah, but guess what? The top lines are still well above. So I don't know. I got to say, I got concerns, flashbacks to the 70s and 80s that the Fed's declaring victory a little too quickly here, guys. And they need to get a grasp on this thing because believe this, and that's why I believe tomorrow's rate cut will only be a quarter. You cut rates a half a point, you're going to stimulate. Stimulate means more spending, means, guess what? More inflation. So I don't think the Fed, I think they want to try to show they're serious about protecting jobs. But at the same time, they want to protect the hard work they've done and the pain we've had in this country to get inflation back down near its target. Quarter point cut tomorrow. Okay, markets. Markets today, man, these bond markets, bananas, guys. The bond market now pricing in, listen to this, a 63% chance of a half point cut tomorrow. So now the stock market is buying all in on this half point cut. Quarter point cut only at 37%. I think the market's setting itself up for a disappointment, guys. The Fed cuts rates. Yeah, that's good. Good. Yeah, Fed cuts rates. But if they cut a half, now you're going to have a risk of inflation. You're going to have the risk that the people in the market take this the wrong way. and interpret it that the Fed has a little more fear than they're showing or talking about where our economy is going. And they feel like they need to make this quarter point this half point cut rather than a quarter point cut to protect the economy. So they're, again, Powell's out on the tightrope, baby. He's balancing out there, and the guy's been a miracle worker so far. I got to say, man, it's really an incredible job the guy's done. Whether it's luck or skill, I don't know. But so far, so good for Powell, man. So we'll see. Tomorrow's a huge day. Interesting article I read today. I guess there's some senator, Republican senator woman, suggesting that America start a sovereign wealth fund in Bitcoin, suggesting that America buy 1 million Bitcoin over the next 5 years. And any gains in that Bitcoin could be used to pay down the national debt. What can go wrong here, guys? If you have the money to buy 1 million Bitcoin at $60,000 per Bitcoin or higher, because once the US announces it's going to do this, imagine what's going to happen with Bitcoin. Everybody will jump in. Price will spike like crazy. You get other countries copycatting the move. And the interesting thing is, who the hell knows would it even work? I mean, the chances of Bitcoin going down are pretty much the same as the chances of Bitcoin going up. Wouldn't do well to spend all that money on Bitcoin and then not be able to use it to pay down debt. If we have enough money for 1 million Bitcoin at $60,000 each, why not just use that money to pay down the debt? Or are they planning on borrowing the money for Bitcoin and then using the profits from that borrowed money to pay the interest on the loan and then pay down national debt? This is an idea whose time has not come, guys. It would be great for Bitcoin and everybody that holds it, just not great for the US. Lastly, guys, just one last observation of mine. The US government, because of the way our economy is structured, with consumers being the bulk of our economy, everything is geared towards spending. I think it's time, guys, the government does a pivot on that and creates some programs to encourage savings in this country, guys. Nobody's saving any money except the people listening to this show. Listen to this, guys. Of people making more than $100,000 per year, 48%, almost half of people making $100,000 a year are living paycheck to paycheck, not saving any money. And that is astonishing to me. I can see if you're at the lower end of the finance spectrum, but when you're making $100,000 a year and you're not saving any money, you're living paycheck to paycheck, that's mismanagement, man. That's incompetence. That's just irresponsible. But here's the kicker of the article I was reading. Listen to this, guys. Of the people making $200,000 a year, which I'm sure all of you guys would agree would be plenty of money to have a very nice lifestyle, right? Of the people making $200,000 a year, 36% of those people are living paycheck to paycheck. So they've achieved a level of success on their income, $200,000 a year. Wow. And what are they doing with it? Pissing it away, not holding on to any of it. Are you kidding me? More than a third of the people making $200K are freaking living paycheck to paycheck. If these numbers are true, bro, we are freaking doomed. We are doomed. Anyway, that's it for the day, man. I'm babbling. I'm running over a little bit. I appreciate everybody's support. We'll be back here tomorrow for Powell Day. So hopefully all of you guys will be here with us. Please hit the thumbs up, hit the like button on the way out. It changes the algorithm around. It gets our video out in front of a few other extra people. We need the views, guys. Appreciate the support. I will be on comments later. Appreciate everybody's support. Be back tomorrow, guys. Until then, everybody, take care. Thanks.